Hello, security pros, and good afternoon. Thank you for joining us on today's Government Insider webinar titled The Economic Road Ahead, Reason for Optimism. My name is Hannah Boone. I'm ESA's Marketing and Communications Manager, and I'm excited to lead this webinar today. Before we dive in, I'd like to provide some tips for those of you who may be joining us for your first ESA webinar. First of all, welcome, and you will be muted for the duration of the session, but that does not mean that we don't want to hear from you. So if you ever come across a question or a comment that comes to mind at any point during today's session, you can click the Q&A icon at the bottom of your screen, and I'll ensure that we save some time for your questions with our experts here today. We'll also be recording this webinar so you can rewatch the on-demand session and share it with your colleagues. So tomorrow you'll receive an email thanking you for your attendance today, along with a link to the recording. We at ESA realize that your time is valuable, and we appreciate you spending some of that time with us today. So without further ado, I will hand this over to Jake Braunger.
All right. Thank you, Hannah. And welcome back, everybody, for episode 3 of Government Insider. Jake Braunger, ESA's VP of Advocacy and Public Affairs here. And glad you could make some time to join us today. I know a lot of you probably have questions about the economy, and Holly is going to sit here and answer every single one in 30 minutes or less, because we got to get her back to doing what she does best, and that's looking at the data and figuring out what it all means for us. So we're going to be changing it up a little bit. We've kind of been talking about kind of some of our industry issues, but we're going to take a look at the kind of larger state of the economy on this episode. And many of our member companies have been keeping an eye on the federal government's tax policy, the inflation rate, and the Federal Reserve's interest rate. And of course, COVID-19 was a major disruption to the economy that led to kind of a massive spending spree, a kind of a sugar rush from the federal government. And now we're seeing that unemployment remains. It's actually, it's come down and it's looking better. Inflation rates have come down from their peaks, and the Reserve currently, as of right now, is holding rates. And so the stock market looks like it had a much stronger year last year, but it's been kind of somewhat unbalanced, is what I'm hearing, is that it was kind of led by some of the Magnificent Seven, as I've heard them referred to as. So what does this all mean? Well, to help us look at the kind of economic tea leaves is Holly Wade, the executive director of the NFIB Research Center. Holly has 18 years of experience conducting original research on the small business sector, focusing on small business economic conditions, business operations, and public policy issues impacting small firms. She produces NFIB's monthly Small Business Economic Trends publication, this COVID-19 Small Business Survey Series, and surveys on topics related to small business operations overall. She's also a frequent media spokesperson on small business issues and related to public policy as well. Since 2020, Ms. Wade has been offering a regular webinar series for NFIB members nationwide, helping those owners navigate through the federal loan and tax credit program. And she's also a member of the board of directors of the Global Interdependence Center, the GIC, and a former board member of the National Association for Business Economics, where she's the co-chair of the Small Business Roundtable. So Holly, thank you for joining us.
It's great to be with you. Thank you.
All right. Well, and let's just jump right into it. So the economy, Bidenomics, we're rolling, right? Everything's great now?
It's a tough road. It's one of those situations where we always talk about how, but this time it's different. And for some instances, it's kind of never different. It's always the same. But in this case, with the inflation pressures that we've all had to manage over the last number of years, especially about last summer, when we saw rates skyrocket and having to absorb those costs, with the supply chain disruptions and things like that, that really bottlenecked a lot of inventories, and prices spiked with food and energy and all sorts of things that small business owners depend on. So we survey a random sample of NFIB's membership every month, roughly 300,000 small business owners across the country and in all industries. And we've been doing this for 50 years. So it's been great to have this rich data set so that we can look at business conditions that are facing small business owners now compared to other business cycles and other economic disruptions. For instance, the financial crisis, or when interest rates were significant in the late 70s, early 80s, and what that looks like now. And business conditions now are in one area of looking at the data, very strong, healthy. Things look to be, pretty positive. And then you look at the other side, and it is hugely frustrating for small business owners in operating their business, but in different ways than we're normally used to. And the two main factors being labor shortages and inflation. And that those two are still very difficult for small business owners to navigate, as they have been. Those two are the top issues that we've heard from our members over the last number of years. So we're still in that same type of environment, a little easier as of, say, the last quarter or two, starting to ease up a bit, but still major challenges, and it's making operating businesses incredibly difficult and frustrating.
Mm-hmm. Well, and you talked a bit about the Small Business Economic Trends publication, and is that the same as the Optimism Index? Is that kind of the same, or is that a separate publication?
No, it's the same survey. So we
Okay.
have a survey that goes out and have the same questions pretty much the whole entire time series that we've had it in existence. And the Optimism Index is 10 questions that we've pulled out of that survey of about 35 questions. And we've created an index. So the index is kind of our headline measure of the small business sector, how we can compare general economic conditions of what small business owners are responding to these questions. They're mostly forward looking to see, what they're planning to do in the next 3 to 6 months. But it gives us a basic snapshot of the small business sector. And that index, again, a subset of the questionnaire, is the best way to kind of communicate with lawmakers, with media, to kind of highlight where they are now compared to where they've been. And right now, our index is at historically very low levels. So, for instance, in the 50-year history of the index, the average reading, which when you throw out, the number of 92 kind of means nothing. But when it's compared, so our benchmark is 100. 100 was a generally decent economic environment in 1986. And so that's where we've benchmarked this index. And our last reading that was published for December, I believe, was around 91, and has remained in this band between 89 and 92 for about 2 years. And so small business optimism, as is measured in this index, has been incredibly low since the pressures of inflation and how small business owners are feeling. And it's very pessimistic and challenging to operate their business. And that's what's contributing to our low index of optimism.
Mm-hmm. Well, and I think a lot of our members, I mean, they're kind of seeing and hearing two different stories, right? Like every now and then we'll hear a new article about somebody in the tech industry laying off thousands of workers because they overhired throughout the pandemic, and they just think now it's time to kind of get a little thinner. Then we also hear that the S&P 500 has notched a new record number. And that the economy is looking strong, low unemployment rates. But one major factor that seems to be everyone's keeping an eye on right now is the Fed. In January, Fed Chief Jerome Powell announced that they'd be actually holding interest rates for now, and that a March rate was a quote not likely. How is this decision impacting small business owners?
Sure. So exactly right that, the last week when they had their meeting and he came out and said, well, we're not seeing the data coming in that makes us feel confident that, March is the right time to start cutting rates. So they're going to keep looking for incoming data to help feel confident that in rate cutting that it won't somehow trigger inflation pressures beyond that. And so small business owners, while it's not their primary concern. So we've seen a bit of a drop off on regular borrowing, certainly because of those high interest rates. So, the projects that they're financing, whether it's more financed through earnings or other mechanisms of financing outside of traditional loans or using lines of credit, things like that, they seem to be finding ways to pay for the things that are that they want to purchase for their business, either in expanding their business or upgrading equipment, buying inventory, those sorts of things. So while the rising, the increased rates or interest rates, the increasing cost of financing, when we survey them just specifically about that, many of them are saying that it is a difficult cost to absorb in their business, that it is causing negative implications in how they're thinking about making those purchases of equipment and having to kind of rearrange the way that they would have typically financed those expenditures. And so it's frustrating on that end. Thankfully, we haven't heard that their primary complaint when it comes to financing is their ability to access. So those are kind of the two buckets. One is, are they having to pay more for financing versus are they having difficulty accessing financing? And we're very set on making sure and looking at all the data about access, because that's the big issue. If all of a sudden small business owners are starting to be declined or not able to receive the financing that they're looking for, that's another set of problems that are incredibly important to keep the business operations going. Right now, it does appear that it is just the cost of financing. And I don't say that lightly. It's certainly a problem in absorbing those costs along with all the other cost increases that they're having to deal with. But cost increases are definitely a better problem to have than the access of financing issue. But many still are saying that it is negatively impacting their ability to operate their business. It is an increased cost that they're having to absorb along with all the other increased costs, and it's continuing to be a challenge. So I know that there are a lot of small business owners that are waiting for those rate cuts to ease up those cost increases, but we're going to have to wait a little longer.
Okay. Well, I know something that economists love to do is talk politics. They like having to talk about the projections on the economy and then bring it into even more theoretical with politics. So I'm going to pull you right in here and talk about something that was recently said by one of our presidential candidates. Donald Trump announced that the reason why the stock market has hit a new record high is because investors are confident he will be elected again in 2024. How much of the economy, according to the data, do you think is impacted by who is in the White House?
Sure. So when we survey our members, certainly elections matter. They matter in the amount that they anticipate having to pay in taxes. It matters in their projecting how difficult it is going to deal with regulatory burdens and those type of hurdles, added paperwork, which is significant for a small business owner, especially those who are kind of the smallest of them, where the owner is having to navigate all of this themselves. And so we talk about this a lot in that, the higher the tax rate, the less money basically they have to reinvest in their business. It makes a difference. The more they have to comply with regulations that don't seem to have the results of whatever goal that they're searching for, and just increases the compliance aspect of it and the time related to compliance and paperwork and things like that. But then also the regulations that have to or that require small business owners to rearrange how they've had to otherwise operate their business up until then. It takes time. It takes a lot of resources, sometimes financial, mostly time, which is, for most business owners, their most valuable asset is their time, because that's where, the owner is having to operate their business. They're having to think about expansion opportunities, all of that sort of thing. And so regulatory burden eats into that time allotment that would have been better used otherwise. So small business owners, when looking at which candidates are going to be more helpful to them, that's what they're looking for. And right now, I wouldn't say that, anybody has a crystal ball on this at all. It is one of those elections where every scenario seems entirely possible at this point. But we'll see. And whoever is elected in whatever configuration Congress is, certainly we will advocate to reduce those regulatory burdens, make sure that those tax burdens, especially the taxes that are scheduled to sunset, that many small business owners have been able to take advantage of because of TCJA, the Tax Cut and Jobs Act. Those are set to expire, and that is a significant consequence of which, what the administration and Congress configuration looks like in this next election.
Well, and I know, and the ESA will be right there along with NFIB on that issue. I think the tax cuts for especially income tax rates are taking a look at expiring, I think December of 2025 right now.
Yes.
So that's been a big pressure right now that we're trying to put on Congress as well. I want to talk a little bit about employment and some internal data that we had. One of the biggest concerns for our members is finding skilled workers in the near future. Now, unemployment was low during the Trump administration. It's the unemployment number has it went up, came back down, looks like, and of course the Biden administration is trying to take a victory lap on it. Is that an issue that you're still seeing? We obviously talked a little bit about the inflation, but you said that labor shortage is still one of the top issues, or is it, you said, the current top issue?
It is. So inflation and labor shortage are the two main issues. They've vacillated over the last couple of years with roughly 23%, almost a quarter, saying that each is their single most important problem. So 23% saying inflation is their most important problem. Another 23% saying labor shortage is their single most important problem. If we had an option of, what's your second biggest problem, it would probably be just flipped. So
Right.
for most employers, they're having a real hard time finding applicants for those open positions. And this is where the economic conditions are kind of unlike anything that we've seen before, where consumer spending is really strong and people are still out there spending money, and leisure and hospitality. Construction is still fairly strong, and all of those industries are labor intensive. And in our survey, construction is by far the number one industry group that's having the hardest time filling those open positions. And while unfilled job openings in our data and in the national data from the BLS has eased up a bit, we're still at very high, historically high levels that we haven't seen before. And hiring plans are the same. They've eased up, but still historically very high. And unfortunately, the demographics of the US aren't going to be supportive of additional labor workforce, unfortunately. And so this is likely something that is going to continue. However, with COVID, it turned into just an immediate shock to the system with all of those early retirees and those entering the labor force, a smaller demographic. So they're not replacing all of the early retirees as quickly, or likely will never catch up because that population is just a smaller cohort. And so business owners are having to introduce more technology into their business to compensate for this labor shortage. And, we just saw, which was kind of amazing, the last BLS report on Friday saying that, 353,000 workers were added to payroll in December, which is just an astronomical, or I'm sorry, in January, just an astronomical number that nobody predicted. But it does show that the labor market is still tight. It was a tight labor market before COVID. and it's just exponentially more difficult now.
Mm-hmm. Well, I know, and as I mentioned, I know that's a big issue for a lot of our ESA members. That's why we are trying to lead on the issue of supporting the Freedom to Invest in Tomorrow's Workforce Act. And actually, while Hannah pulls that link up to share in the chat, because everyone watching should take action and join us in sending a message to their member of Congress in support of that. I know NFIB is kind of still looking into the bill right now, but it's something that we certainly like. While that's taking place, I want to remind people that now's the perfect time to start asking questions. I'm going to turn it over to Hannah, see if anyone has got any questions for us in the chat.
All right, let me see. I'm pulling it up right now. Okay, so yeah, we do actually have one question that got submitted. So it's inflation rates have come down, but should the Federal Reserve pursue a short-term policy of deflation to try and restore value to the US dollar?
That's a good question. I think a lot of times we keep hearing that, well, inflation's come down, but it's still above that Federal Reserve target rate of 2%. Is I think it's what, 3.739, something like that, which
Yes.
means that it's kind of like an alcoholic saying, well, I'm drinking less than I ever have. It's just instead of 30 beers, I'm drinking 20. So are we still seeing progress? So the inflation rate has come down, but prices are still increasing at an above the Federal Reserve's target rate. Is there ever a consideration to try to go negative with the inflation rates short term, Holly? Is that ever talked about? You're hanging out with the Federal Reserve today, right? So I mean,
I am. I'm in the Miami
you're the for
branch of
sure
the
expert on this.
Yeah, I'm in the Miami branch of the Federal Reserve right now, and this is, in all circles, this is a topic that we've discussed quite a bit. And, so with your analogy, it is harm reduction, right? So the rate of inflation is decreasing, but, it's still in the high threes, and that is a very uncomfortable position. That's why we're still seeing, 20 to 25% of our members saying that inflation is still their single most important problem. So, until we get down to some level of inflation rate around 2, which is the Fed's target, and, it'll start easing some of those pressures. So I've been asked, well, how about, it's not going to reduce prices, certainly to where we were in 2019. That's off the table. The only way that happens is a massive recession. That is nothing that anybody wants to happen. That's why we keep talking about the soft landing or no landing, or, hovering above the ground and keeping afloat, but not cratering the economy, which then you would start going into, a scenario where we would see actual deflation. And that's not an environment that would be helpful for the economy. As I said, that would look like a massive recession. So reducing the rate of inflation and having that going forward would go a long way for small business owners specifically, but for everybody, in feeling more comfortable about managing their money, understanding how much they're going to have to pay and absorb those costs, pass those costs on to customers. Right now, on the inflation front, which we saw, especially at the beginning when we were seeing inflation rates of 9%, and it started slowly easing up. But it was still incredibly difficult for small business owners to know, because they're in a competitive environment. They're competing against, their smaller counterparts, their larger counterparts, all of those companies, and trying to figure out how much they can pass along those costs to their customers and how often they can pass those costs on to their customers without losing their competitive advantage of, whoever their target audience is. And so while, we certainly want the inflation rate to come down again to somewhere around that 2%, or even a little bit below that if possible, without tanking the economy. Deflation, while it sounds like it would be, something that everybody would benefit from, the only way that happens is if everybody does a fire sale on their product or service, and that would require everybody pulling back on spending. And we don't want that to the extent where we would end up in a recession. And that's been the balance of the Fed that they've been trying to navigate for the last couple of years. And so this is why we're seeing, Chairman Powell talk about how maybe not rate cuts right now. You know, we don't want to get into this this environment where, you know, things start ramping up again. They want to keep interest rates where they are for a bit more time to hopefully slow up consumer spending, slow up that rate of inflation to something more comfortable, and hopefully have it stay there so that we don't have kind of whiplash of what that might look like, because that again will be very uncomfortable for consumers and also small business owners.
Well, and that's what I think is kind of fascinating too, is how interconnected all of this research is. For example, we talked a little bit about labor shortage and those people who were approaching retirement around the years that COVID was, at its peak, and that maybe they were laid off, or maybe they did leave the workforce, and now they're seeing very high interest rates on their savings accounts and what they've had currently invested, and that the longer they're out of the workforce, the less likely they are to want to return. And so we're going to continue to see
Absolutely.
that. And then unless those rates come down, they're just going to sit there and say, well, my nest egg's doing just fine. There's no reason for me to come back to work. So the interconnectedness of it all is just really impressive. Hannah, I want to see if did anyone else submit any questions for us?
Yes, actually, we have another question in here. It says, is it true the Trump tax cuts are slated to expire next year? And if so, how might that impact the economy?
Right. Okay. So yeah, we did talk about the Tax Cuts and Jobs Act and parts of it to expire. Can you break it down a little bit more for us, Holly?
Sure. So December 31st, 2025 is when they're expected to expire, as is scheduled right now.
Oh, Merry
And it
Christmas
will,
2025.
yes, Merry Christmas, Happy New Year,
Yeah.
right? I mean, it is going to be a big jolt to the system if they don't figure out a way to extend it, make them permanent. When the bill was passed in 2017, I believe,
Right.
they, you know, all of the like the corporate rate was permanent. So 21% corporate rate that was made permanent, you know, as permanent as Congress lets it to be permanent, right? So, you know, who knows what that looks like going forward. But all of the pass-through provisions that were very helpful for small businesses, the federal income tax rates that were lowered for many of the brackets, and also that very important small business deduction, that 20% deduction on qualifying small business or qualifying income, that most small business owners were benefiting or are benefiting from, that
Mhm.
expires too. And so those are the two big provisions that NFIB is advocating to help extend, make permanent. We know that this is important for their bottom line, for business, generally speaking, their ability to reinvest in operations, make those capital expenditures, and especially with higher interest rates, you know, they're using their profits more and more in financing these purchases, and having those taxes, the lower tax rates, stay where they are will go a long way in helping small business owners do that. So those are the two main pieces of the tax code that are set to expire. The other one is the estate tax. So right now, the estate tax threshold, I believe, is $5 million, if I'm not mistaken. And that will go back to what was the threshold before the TCJA. And so that is going to have a huge impact, especially with the valuation of property and things like that, that now have exceeded what the threshold is. And more small business owners would have to think through the estate tax and how that impacts their ability to pass along their business to the next generation, or selling their business, things like that, that, you know, previous or over the last number of years, they haven't had to think about. And we don't want them to have to think about that going forward. So we really are, you know, advocating to make sure that those provisions are permanent, to ease the tax burden and the uncertainty of what that might look like with a tax increase at the end of 2025.
Well, there's nothing, there's not a better topic to ever try to wrap up a webinar with than discussing the possible increase of the estate tax. So even when
Well,
you die, you still have
yeah.
to pay additional taxes.
Sorry to leave it on such a negative note.
Well, yeah. So I guess, yeah, my last question then, Holly, to you. Well, I mean, we talked a little bit about the rates, inflation, labor shortages, and tax rates as well. What else are you guys seeing in the data right now in the research center?
So one of the areas, and this hopefully will end on a positive note,
Oh,
two
that's right.
things. One is supply chain disruptions. So we've seen a huge kind of correcting, freeing the bottlenecks that were so prevalent a couple of years ago have eased up significantly. So for most small business owners, while they might have some sort of supply chain disruptions, it's not as pervasive as it once was. So those headwinds are easing up, thankfully, because that was a huge problem for small firms, especially when oftentimes they're not able to kind of figure out other ways of accessing the inventories or supplies that they need to operate their business. And, it takes a lot of time to navigate all of that. And so because those are becoming more untangled and easing up those deliveries, this has been a huge help for a lot of small business owners. And then the other bright note is over the last number of years, the number of business formations has skyrocketed. And
Hmm.
so in every economic disruption, you have a lot of opportunities. Unfortunately, it comes at a cost for, those who have had to struggle through those, economic or the government shutdowns and things like that. But for others, it created this marketplace that they saw opportunities, and we've seen record level business formations, and even record level business formations that are, as they call them, high propensity, or those who are likely to employ a worker, which unfortunately is, creating a bit more competition for those who are already in existence looking to fill those open positions. But that the kind of the dynamism of entrepreneurship is alive and well is a very good sign for our economy.
Excellent. Well, yeah, I'd say that's a lot more of a positive note than the possible increase of the death tax. But thank you so much. Yeah. Well, I hope some of our ESA members feel a little bit more informed after this episode of Government Insider with this kind of deeper dive into the economy. I always feel like I'm now more prepared to go to cocktail parties and act real witty and sophisticated. So I certainly appreciate it. And people should definitely check out NFIB and the Research Center, and of which ESA is actually a member of NFIB and proud to be so. Holly, is there anything else you want to mention as we wrap up?
No, thank you so much for having me on your show. And if you have any interest in looking at the survey data that NFIB produces, it is free and access to the public. It's at nfib.com /research.
Excellent. Well, thanks so much again. I've been your host, Jake Braunger, and I look forward to seeing you ESA members for our next episode in April. So I'll see you all in the spring. Thanks so much.